You know, looking backwards to the conversation we had this morning about volume, you can see just how effective that has been, bearing in mind we had a capper at 68s and a low price around about 53s, 54s, 15 points lower. So we're looking at a price of about 83 to 85 as a target. So if we're looking at 83 to 85 as a target, guess what happened? 83 to 85 eventually traded exactly as we've seen on 3 previous occasions with regard to those volume accumulations that we chatted about this morning. So you can see how amazing this accumulation process is, but you can also see how detailed the accumulation process is. It's not about any one particular single candle, but it's made up of stories connecting candles. It's made up of stories connecting the dots. And when we go back over the kind of things that we talked about this morning, we talked about this accumulation zone in the background here at 4 o'clock this morning. We talked about the pullback trade here for the spring. We talked about the top edge accumulation here coming into the early European session. And we can obviously recognize that those accumulations which continue to accumulate, and one of the things that we got from this story was the build-up of knowledge. It's not an instant thing where you go, right, I know exactly what's happening. It's a process of reading through the chapters to gain an insight into what's happening. It's not a single word. It's not a single sentence. It's a series of sentences and a series of paragraphs that make up the story. And when we understand that that's the case, this accumulation becomes very, very obvious in terms of the simple structure that we saw coming from it. And likewise, the accumulation at the top edge becomes very, very obvious in terms of the structure that we saw coming from it. The target prices were all great. You can see the pullback trades were unbelievable. You can see the pullback trade, and this one was perfect there. You can see the pullback trade, and this one was perfect here. And you can see a lot of those elements that we teach every day in the classroom coming out to play here. You can see as we finally broke through the structures, there wasn't a pullback trade per se. There wasn't anything that we could say, well, there's the pullback. But you can see the accumulation when we drill down into the shorter term world. We can see those accumulations evolving. And obviously from those accumulations, we get some crazy, crazy decisions, crazy opportunities to make the right decision at the right price. And it's just unbeatable, guys. It really is unbeatable when you start drilling down into the stories. And once we see the storyline, we can start to understand why and where and all these kind of other things that go on in the background. It's all part of that storyline building as we go forward. So if we get time this evening, we'll maybe go back over that. But we obviously want to focus on seeing it on the right-hand edge as it evolves through the story of volume, through the idea of what the volume is all about. Because a lot of people don't have order. Most of you have order flow, but a lot of you still don't have order flow. So we want to take a volume angle to these stories as well. And that's what we're obviously going to be focused on this afternoon in classroom. One of our biggest trades this morning was a brilliant sell on oil. We chatted about it this morning. And it just keeps giving, guys. It just keeps giving. So the pullback sell was just as good. Well, it wasn't just as good. It was good, but it wasn't just as good. But you can see here why we're selling oil. There is no question about what we should be doing. This is against the calendar spread, of course. And you can see that we had a brilliant level to work with. We had a brilliant calendar spread to work with. We had a top edge developing right into what time? The Brent oil open. Unbelievable, right? So you can't make it up, guys. It's crazy good. And you can see that that accumulation is sensational in terms of a top edge. And then obviously based around the bracket, the markers, we've obviously got a couple of brackets that we can work with. We had this bracket here, which gave us a marker below the bottom edge here. We got a nice touch into the bottom edge of that bracket. That was my first main target price there. We got a nice pullback sell into the halfbacks. We got a brilliant continuation down into my target price, which was 83.20s. Touched the 83 handle, bounced off the 83 handle, gave us another sellable opportunity off the 84 break. And obviously from that 84 break, you can see we've came clashing down all the way back down to 83s again. An enormous morning on oil. absolutely enormous. But look at the calendars and tell me that that wasn't visible, guys, or what? It's nuts, isn't it? It's not even hidden from view for somebody that's willing to put in a couple of lines on their charts. It's a crazy good looking opportunity. Now, I don't think it's crazy good looking anymore as we obviously come into the NYMEX market at the lows here. I don't think it's crazy good anymore. So if you're short, I would be using that as a walk away just now from that trade and trying to think about what you're going to be doing next. You might also be thinking about what you're going to spend all that $1,000 profit on that you made on your short oil trade off the highs. There is no other trade. There can't be any other trade when the calendars are this bearish. So when you're looking at the calendars, sometimes you don't get any reads. The calendars are not a short-term read. They're a macro read, aren't they? There's something that you see on a longer-term narrative. You can't really get a read on a calendar and not see how bullish this was in here, for example, and how bearish this is in here, for example. It's just impossible for you to make a mistake when it comes to your oil trades. And when you see that value, you can simply start working it and working it and working it and working it. It's absolutely nuts, isn't it, how good it is when you see it. It's not that difficult to see it. You've just got to get context to everything that's happening. Short, sell on oil, and short sell only on oil. There might be some scalp buys coming up. I'd like to be gaming the 83 liquidity at the bottom edges before any buys do show up. But there might be some games. We've got some nice paycheck liquidity just below that 82.80s. So I think if I'm going to be buying it, it'll probably be between the 82.50 and the 82.80 area. So I'd be looking perhaps around about that kind of area for possible buy trade opportunities. And obviously working down into those areas would be my ideal opportunity to start bidding into this low print. Looking at the expensive nature of oil, of course, we can see that oil seems to be quite expensive on downticks, but we have that simple difference of opinion. Just now, oil isn't about whether it's cheaper or whether it's expensive. It's about the supply and the demand. We've obviously heard a lot of sound bites from some of the energy nations. We've heard the Russians talking about supplying gas into Europe, for example, this morning. We've heard about the Chinese releasing some of their massive stockpiles of product into the market as well, putting a little bit of supply back into markets, which has helped to the energy markets to sell off just now. And that's obviously what we've been seeing as the energy markets have been selling off based on those fundamental shifts. So it's not really a dollar storyline, is it? It's not really got that dollar angle to it at this present moment. So I've really enjoyed it. Looking at the inflation break-evens, just to see what the bond traders make of this sell side storyline. You can see already that the inflation break-evens are very, very, very clearly telling us that this is a sell trade at 8 o'clock this morning. I don't think there's any question about the inflation break-evens, correct? There is no doubt in your mind at 8 o'clock that the inflation break-evens are 100% behind the sell trade. So it just solidified the idea of working sell side as much as possible. And it wasn't that difficult to find a price, was it? I mean, it was simply trading the high volume that was coming in line with the supply, in line with the inflation break-evens, and just simply making the big gains to the downside until oil had caught up with the inflation break-evens at the low price here, and then using that as a walk away to close off your oil trades for the day. And I don't know if I'm going to do any more oil trades. I don't know if I'll be able to get the price I'm looking for the buy trade. If I do, I might be interested, but at the present moment, as far as I'm concerned, oil is off the table for everybody except for the scalpers. If you see a scalp, you're in good shape, but if you don't, then obviously as a swing trader, it's time to let oil left alone for the scalpers to take something out of it. We've done our business, we're finished for the day, and we move on to another market that might be giving us a few more opportunities. Looking elsewhere for opportunities, of course, is the challenge. I mean, if you're obviously focused on one market, you can't really go ahead and do that. But if you're obviously looking at other markets to try and trade, then obviously things like looking at things like the gold markets, trying to find opportunities on gold. Yeah, well, let's talk a little bit about those gold opportunities, because it's been a funny old instrument this morning. It's got a very clear accumulation. It's got a very clear accumulation. Let's show you what I'm talking about when I'm talking about the accumulation. Does everybody see the accumulation, first of all? I'm just talking about price action accumulations. It's very, very, very clear. See it? We've obviously got at the overnight session highs, which is this price here. So we've got the overnight session highs coming in from the US session highs. We've obviously got the RGL, which is here. We've obviously got a buyer that's come in off the low prices, but you can see that accumulation phase coming in through that phase there. You can see how clear, how crystal clear it is in terms of an accumulation phase. You can see how it builds. You can see how these accumulations evolve over time, not over a single candle as we were talking about in the London session when we talked about that that build of volume in the Nasdaq this morning. But you can see that it's an accumulation, certainly from a structural viewpoint, it's an accumulation. And obviously from that structural accumulation, we can start to make some ideas of some measures against that final accumulation phase. And it gives us some target prices. It gives us some ideas about where we can start anticipating seeing perhaps a bit of buying coming in here. And you can obviously see that that's where the buying does come in these areas. You started to see some buying just as we touched the pink zone there, more buying when we came into the pink zone here. And obviously you had the initial pullback area there that developed into a second accumulation. And this is what happened. Remember, this is what happened on the Nasdaq as well. So this isn't something that you look at and go, I don't know what that is. It's exactly the same as what it was before. It's a second accumulation. And as I said, when you looked at the Nasdaq this morning, you got exactly that same thing. Take a look at the Nasdaq. You see what happened at the top edge of the Nasdaq here? See what happened at the Nasdaq? First accumulation, and then a bit of pivot pricing in here, and a little bit of distributions, and then they came back up for a second accumulation. And at the second accumulation, they do the same, but then they get the halfback seller. And then they mark down the price from the halfback seller. That's why we're always telling you to look for that halfback trade, that guy that's starting to move the value distributions. The trade that Theo was very, very interested in when Theo started to look at these ideas. The trade that people who want to try and find the safer markdown phase, rather than trying to get involved in the dogfight that is the gaming of liquidity levels, trying to find the halfback seller after an accumulation becomes a very, very nice way to deal, because there was a halfback seller here, which resulted in a retest of the lows. And then we had another halfback seller here on a spring, which gave us a break to the downside, which gave us this brilliant sell-off, which obviously was exactly the same as what happened on this gold trade here. You started to see the selling coming in here, brilliant accumulation, and we started to see some more selling coming in here. Then we had the halfback. You can see the halfback seller right there. There's the halfback seller showing up there, and there's the halfback seller showing up on a spring trade right there. And then you now know that that's the safer opportunity to get that short trade, and sure enough, that short trade has resulted in the perfect target price eventually, down into the low prices. You then get another sell into an area. Now, this is what we were talking about this morning when we talked about the Nasdaq. When you recognize commercial areas, guess what you should be doing? Marking them on the charts. Oh, yes. Because when I recognize the start of a commercial area, if I just mark that line across the charts, you don't forget about that commercial sell. If you look back at the Nasdaq from this morning, and we did this in classroom this morning. For anybody that was in this morning, I'll tell you we covered basically every single trade that we saw in this. If you look at that Nasdaq and we start talking about that commercial buy that we had at the bottom edge of the Nasdaq, if I just now mark off that commercial buy zone just there, and we can simply see that now with that yellow orangey colored line. So we know there was a commercial buyer in that zone, and then when we started to see that commercial sell zone here, if I just mark off that commercial sell zone in the charts with another banded area, one of the things that we can start looking at is the fact that there is a commercial trade perhaps taking place in these areas. So why is that useful? Because when you go forward into the future, you don't forget that there was a commercial buyer at that price before. So when you see the price trading down into that area, you're already aware that there was a commercial buyer here before. And you're prepared for them, you're looking for them, you're watching for them appearing again. And you can see what happened. The price came away from that area, commercial buying, spring buying, commercial buying, and it got back up to the commercial sell zone. And now the NASDAQ is bracketed inside the two buy and sell zones. So when you start marking off these commercial buy zones and sell zones, one of the things you start recognizing is that this was a commercial sell zone, and therefore when it tests back up into it, it may be another sell in the future. Simple as well, isn't it? Simple as well, just marking a level, marking a line. It doesn't mean that this is a level, it means that this is a zone on a bigger chart. This is a commercial sell zone on a bigger chart. And what you sometimes find is when you go back and look at this from a profile context after it's all formed, that the line ends up roughly where the POC ends up. So when you see that starting point for the commercials, remember the commercials aren't necessarily below the POC. The commercials are usually the POC and above inside the taper, right? So when we look at that from a profile point of view, where's the profile gone? Okay, they've moved the profile into built-ins, guys, just in case you've lost it. So when you look at that as a profile, can you see that the line in the POC is nearly the same thing? Who didn't know that? Who didn't see that? Who wasn't already prepared for that area there being the commercial sell zone? Because it becomes very obvious and very evident about where the commercial sell is located. It's the POC and above, isn't it? It's got to be the POC and above. So when we understand that that's the case, we can obviously be prepared for that price trading back into the POC or above to try and look for the possibility of a bit of short business. Now, was there any value on it? There's a big question. Well, we can see in terms of expensiveness, you can see why they accumulated this morning in the London session. This is very obvious in this sense that there is a huge expensiveness attached to gold at higher prices, with the euro dollar getting well sold off during that early phase. So that looks dead easy. The half-back trade at the time looks easy, and the sell-off, the retest after the euro selling, that looks easy. The bottom edge looks like an easy bottom edge. It looks like an easy money distribution into the low prices, possibly even a buy for a reversal trade at that stage. So you can already recognize how easy the bottom edge is in terms of value. So there would be no opportunities to buy some gold at low prices. When we start looking into those areas there, we can start to recognize other values. We look at the other values of real yields. We can obviously look at oil. We can look at the real yield associated with oil, and we can see another reason why this was a very good sell on gold. Not so much a good buy on gold, which is why there's no buy arrows here on gold. It's been predominantly a sell. That's in line with the fact that I've been predominantly selling bonds, of course. So selling gold and selling bonds has been my main trade for the day, is selling bonds and selling gold. So that looks pretty obvious as well. Looking at it from a copper point of view to make sure that the real yields kind of line up, because we've got to be careful with oil just now, because there are things afoot in the oil markets, obviously, that are unique to the oil market. So when we look at copper against real yields, we can see that the sell is still the same. The buy at the bottom edge actually gets a little bit more quality because of what copper's doing. Copper's catching a little bid here, which is going to drag commodity prices slightly higher. So you get a very reasonable read on the bottom edges here. So it's a nice trade. Hopefully you've managed to get a little piece of that, guys, today. I like it. I like it. I like it a little bit.